How you guys doing? Well, what a day. Today and yesterday for me, guys, was an outlier day. They were pretty big winning days for me. And this is what trading's about. I always talk about this: outlier trades, outlier days, outlier weeks. And this looks like this going to be my outlier week for the month. So it was pretty good trading the last 2 days, even though on Tuesday I pretty much broke even. But these 2 days more than made up for that. And what I want to talk about today actually is I got a few IMs on people that want to talk about the dome and how do you price when because I feel like I'm a price, not a price action, but a order flow trader rather. And I just follow the dome and things like that. And my question was, how would you start to do that? Like, how would you start to follow the dome? For one, you have to look at it, obviously. So that's what you start doing. Start paying attention to it. And there's some good trading. I mean, there's some good educational firms out there that do good training. I'm not gonna say their names because like I said, I don't really believe in marketing any particular company. But there's some good training out there for to learn how to trade the dome. But what I would do, if I could do it all over and start to trade the dome, is what I would do is I would look at the dome and I would see how it react. How it moves. You could see how fluid it is, and just get used to your eyes looking at it and keeping up with the speed. Because when you first start looking at it, it's going to seem really really fast, like it's going to move fast. So I would do that. Once your eyes and your mind catches up to the speed of it, then I would shift into, and that takes a couple days actually. Then I would shift into looking at levels. And a lot of times, a lot of people want to say, okay, should I look at the dome all day? And in honesty, your competition, which are if your competition is mostly future prop firms, and they're intraday future prop firms, and this is what they're looking at. They're looking at the dome all day. All their trades is based off order flow from the dome. So your competition is looking at it all day, but I don't look at it all day because it's very intense. It's very tiring to look at it all day. But I do. I'll show you how I use it. Okay. And and I can hear some of you guys saying, looking at the dome, there's a lot of spoofing, there's a lot of pulling, there's a lot of flipping. Well, what you have to understand about the market is nothing but a huge poker game between big traders, and we're just on the sideline trying to piggyback off of what they do. That's all we're doing every single day. Big traders are playing a poker game, and sometimes they're bluffing, sometimes they're telling the truth. And what you have to understand is they can't just come out and say, "Oh, I want to sell a million contracts at 47 here," and have the whole market see. So they have to play a poker game. They have to buy when they really want to sell. They have to sell when they really want to buy. So understand that first, and learn to live with it, because that's just what trading is. It's just a big poker game between the big traders going back and forth, and learn to live with that. So, but back to what I would do, and this is what I would do, and this is how I use it. So, say I'm in trend mode and I want to take pullback. So, the market makes this bottom, and then I want to start to look for a pullback. Okay. And this is just examples, guys. And market started to pull back. Now I know, once I know it's in a defined pullback, like it's actually pulling back and not just basing and then dropping again or something, I would start to look at the dome close. Now I would get really intense and start to like pinpoint my entries, and I would start looking at levels. And you actually want a dome, guys. You want a dome, a depth of market that's 10 levels on each side, bid and offers. You want them on 10 levels up, 10 levels down, just because you want to see that deep, possibly more if you could, but you want them that high. So what I do is, once I know it's pulling back, I start to look at levels. So if I was new, I would start to look at levels where I see a lot of volume resting. Say there's a lot of volume resting on an offer here, and the market's pulling back. And at four, let's just use an example of 47. You see 2,000 ES contracts resting on there, right? I would pay attention to that level, okay? But again, when I talk about big volume, I don't mean it in the sense of 2,000 being big volume. I mean relative to the volume that's trading that day. So if you're watching the dome and the average volume of that day, you start to see like at each price average volume that day is like 4 or 500. Then if you see a level with 1,500, that's 3 times more the average volume of that day. So now you pay attention to that. So the volume is going to be relative to the day you're watching. So it's different every day. Like some days, 1,200 can be considered to me a big level, and then other days it can be like, okay, that's just normal. Okay, so but let's just use 2,000 as an example. Okay, there's 2,000 orders resting on 47. I would really pay attention to that level. I'll say, okay, that's a level maybe where I want to play. I want to take a 50-50 bet. But and I know some of you guys are saying, what if the market doesn't get there? Well, sometimes we all put limit orders in and the market don't get there. But this is where I really focus in, because if the market's on its way there and then all of a sudden 2 ticks above me, I see offers jump on to, say 40, so market's trading at 46 right now, and then 46.50, I see 1,500, 2,000 orders jump on 46.50. Now my mind's going to shift to, okay, if the market gets to 46.50, I'm going to take a chance of a short. You understand what I'm saying? You're looking at big levels where the players are playing, and even if they move it, it's okay. So and then start taking notes of these levels and watch how price reacts to it. Okay, so say for instance price was at 47, market gets to 47, and you can see market turned and went down. That's how it should go. So the market shouldn't go 7, 8 ticks above where the huge volume. If that was real and they didn't pull their orders, they wouldn't spoof in the market. They just wasn't pulling and flipping. Then the market shouldn't go no more than 6 or 7 ticks. It should roll over, because if remember, that's 3 times the average volume of per level. So once the market gets there and it hits that level and goes through it, it shouldn't tick no more than 6, 7 ticks above that. It should just start to roll over, because you know because uh, supply and demand. It should just, that theory alone should take over and start to push the market down. So I would start taking notes of how the market reacts to those certain levels, and then just write it down. You don't have to trade it. I don't want anyone trading it, or just watch it. Just watch it. Just get intense with it. And you're gonna start to notice how the market reacts to certain things, and then after that, a little further down the line, I'll show you guys a little bit more advanced stuff, but that's just the basics. That's what I would do for now. I would start watching levels like that and see how market reacts to levels that's resting on the bids and the offers. And you don't have to watch it all day. Just watch it when, say, market's pulling back and you're in trend mode and you want to do a continuation. So, you watch it that way. That's how I would do it, okay? And then I want to talk about this, a trader on ET that we go back and forth. We trade ideas with each other through IM, and we talk. And he said something interesting. He started looking at the dome and started really paying attention to it. And he said today, when the market was trading before that drop at the close, he said the market was trading at 46.5. And he saw a lot of orders there, a lot of orders on the offers, and then the market went through that order and it was testing and improved, and then it sold off. So he said he understood that there was a big seller there, because once the market went through that level and started to turn, then now you know that was actually real order flow. That was real. That was traders really wanting to sell this thing off until the close. So that's the and I said to him, I typed back to him, I said, you can't get any closer to the market. You can't want any more leading indicator than that. There's no more leading. You can't get more leading than what you just said. What you just saw is there's a lot of orders, and he entered a tick below that. A lot of orders there. It went through there. It tested it for spoofers, and if anybody trigger, and then it rolled over and just sold off hard into the close. There's no more, you can't get any closer to the market than that. There's no more leading indicator than price on the dome. That's the point I'm saying. That alone is the principles that you trade by every single day when you're looking at the dome, and you start to understand the action that's going on in the dome. Stuff like that. So if you guys have any questions, just let me know. But that's kind of just what I wanted to express, the dome, and just how you would go about learning how to do it. So guys have any questions, let me know.